What is happening right now in the world of gold and silver is absolutely unprecedented. In just a matter of hours, we've seen a market event so dramatic, it's almost hard to believe. We're talking about a massive, shocking plunge in both gold and silver prices, with what seems like trillions of dollars in paper value simply vanishing into thin air. This isn't just a minor correction. Some are calling it the most significant single-day percentage drop for silver in recent history. Gold hasn't been spared either, taking a nosedive that has sent shockwaves through the entire financial system. But here's where the story gets really interesting. This isn't just about numbers on a screen. While prices are plummeting on Western exchanges like the COMEX in the United States, a completely different story is unfolding on the other side of the world. In the East, specifically at the Shanghai Gold Exchange, we're seeing a phenomenon that seems to defy all logic. Reports are flooding in about massive physical shortages. The demand for actual physical gold and silver is so intense that buyers in China are willing to pay huge premiums over the spot price just to get their hands on the metal. Think about that for a second. In one part of the world, the price is crashing, while in another, people are paying extra for the real thing. This creates a massive disconnect, a chasm between the paper price and the physical price. So, what could possibly explain this? This isn't just random market volatility. What we are witnessing looks like a high-stakes economic battle being fought between two global superpowers through their primary precious metals exchanges, the US COMEX and the Shanghai Gold Exchange. It's like a financial tug-of-war, with the West seemingly trying to push prices down through paper contracts, while the East is aggressively accumulating the physical supply. This raises a critical question. Which price is the real price? Is it the one set by futures contracts in New York, or the one being paid for actual bars and coins in Shanghai? This divergence is something the mainstream financial media seems hesitant to cover in depth. They might report on the price drop, but they rarely dig into the why, especially not into this East versus West dynamic. It's almost as if there's a concerted effort to downplay the significance of what's happening. Many analysts believe this could be a deliberate attempt to shake out weak hands, to create panic among smaller investors, and force them to sell their holdings. When fear takes over, people rush to sell, which drives prices down even further, allowing large institutional players or even central banks to swoop in and buy up physical assets at bargain bin prices. It's a classic playbook we've seen time and time again in financial markets. Let's break down how this works. The COMEX largely deals in paper gold, futures contracts that represent gold but are rarely settled for the actual metal. It asks possible to control and manipulate this paper price with a relatively small amount of capital by dumping a massive number of contracts onto the market at once. This creates the illusion of a huge supply and drives the price down. But in Shanghai, the game is different. The Shanghai Gold Exchange is a physical market. To trade there, you need to have the actual gold. This is why the premiums are skyrocketing. The demand for real, tangible metal is stripping the vaults bare. They are essentially calling the bluff of the paper markets. This isn't just about making a quick profit. There are massive geopolitical implications here. For years, countries like China and Russia have been openly working to de-dollarize, to move away from their dependence on the US dollar as the world's reserve currency. And what's the historic alternative to fiat currency? Gold. By accumulating vast reserves of physical gold, these nations are building a foundation for a potential new monetary system, one that isn't controlled by the West. This recent market action could be a major move in that global chess game. Is this the beginning of what some have called the Great Reset, where the entire financial system is restructured? It's a provocative thought, but the evidence is compelling. So, what does this mean for the average person, for you and me? First, it's a wake-up call. It shows just how disconnected the paper price of an asset can be from its true physical value. The price you see on your screen might not be the price you pay if you wanted to actually hold it in your hand. This is a crucial distinction that everyone needs to understand. When you see prices crashing, the first instinct is to panic. But if the fundamentals, the actual physical demand, are stronger than ever, that price drop might represent a huge opportunity. We're seeing reports of dealers in the West being completely overwhelmed with buy orders. While the price is falling, people are not selling, they are buying. This suggests that a growing number of individuals understand what's at stake. They see this price suppression not as a sign of weakness in gold and silver, but as a sign of weakness in the paper-based financial system itself. They are choosing to trade their fiat currency for a real, tangible asset with no counterparty risk. The situation is incredibly fluid and developing by the hour. What happens next is anyone's guess. Will the paper market succeed in pushing prices even lower, or will the relentless physical demand from the East finally break the system and cause prices to snap back violently? This is the core of the battle between Shanghai and the US exchanges. It hints a fight for control over the pricing mechanism of the world's most important monetary metals. The outcome of this struggle will have profound consequences for the global economy. for the value of our currencies and for your personal wealth. It is absolutely essential to stay informed and to look beyond the headlines. Don't let the manufactured panic guide your decisions. Do your own research, understand the difference between paper and physical, and pay close attention to the premiums being paid for real metal. What is happening behind the scenes is a story that will define the next decade of finance. We'll be tracking every development right here, bringing you the information that others won't. Make sure you are subscribed with notifications on because you do not want to miss our next update. This story is far from over. Thank you for watching.